What's up guys? Today I'm going to cover support and resistance, which are the most important pieces of technical trading that you can learn. A problem I see with most traders is that they get these levels completely wrong. Sometimes you'll see a chart like this and not know what you're looking at, and you definitely won't know how to trade it. So today I'm going to share two things with you. First is how to draw support and resistance the correct way, and I'll be teaching you what courses typically charge thousands of dollars for absolutely free. And secondly, I'll be teaching you how to trade support and resistance, as well as strategies you can use to minimize your losses and maximize your profits. Before we get started, please hit that like button and subscribe. And don't forget to turn on that notification bell so you don't miss any future videos where I'll be teaching you everything you need to know to master the stock market. All right, so let's hop right into the charts here. I'm gonna be pulling up the chart of UPS. By the way, what I'm using today is TradingView, and this is the platform that I use to chart all of my stocks. It's super user-friendly, so go over to tradingview.com to check it out. Anyways, first thing I want you to do is zoom out to at least the day chart to draw your levels of support and resistance. So you're going to come to the top left-hand corner, click on D, and this will bring up the day chart. So pretty much the higher the time frame is, the more accurate or the stronger your levels of support and resistance are going to be. So I find that charting on the day chart is really helpful. So I want you to treat support and resistance as like a floor and a ceiling. So with support being your floor and resistance being your ceiling. So let's draw this first line here, and you can click on this right here, or if you're on a Mac, you can hit Apple H, and we'll draw our first level of support right around here at 156, okay? And the reason why I draw this here is because all these candles come down here, they bounce off of it and rally up, bounce off of it, rally up. Here we see bounce, rally up, bounce, rally up, all the way here, bounce, rally up, bounce. Okay, so 156 is a really strong level right here, and then we're gonna draw our next one, and that's gonna be right here at around 168, okay? So you want these levels to be obvious. So if you have to squint and see whether it or not it's a level, then it's not a level. For example, if you were to draw right here, you see, man, this candle wick comes up and touches this line right here. Let me just draw this level right here. Well, it's not a great level because look, the price action goes above, below, above, below, above, below. So this is not a great line right here. So I'll get that out of here. All right. Next, you want these levels to touch the most candles as possible. So we see here that this level of 156 has a lot of touches. So let's count them out right here. So we see, look, it's functions as support 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Wow, 21. And then let's take a look at this level right here. How many bounces do we have from it? It acts as resistance. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 times. So these are really strong levels. All right, so let me finish up drawing all of our lines here, and then we will talk about them. So I'm going to place my next line right around here. My next line right here. Actually, I'm going to place one right here as well. And then I'm going to place one right around here. And we see a bunch of resistance right here, so that will be my last line. Okay, so another thing that I want you to notice is that when price breaks resistance, it becomes support. So let's just focus on this little area right here, okay? So look at this right here. So we see that price action breaks this resistance line at around 175. It comes up, but then it comes right back down, and this 175 level acts as support. So it bounces up again, it comes back down, acts as support right here before it bounces up massively. And from here we see that the stock just rocketed off. All right, so now let's talk about natural support and resistance. So for bigger stocks like UPS, which is a $200 stock, these can be in $5 increments. So for example, it can be 150, 155, 160. So for example, if there's a breakout to the upside or the downside, this is where we can determine where the price may reject off of. So if price action breaks above to all-time highs, for example, like right here, we can look at natural levels of resistance. And we see that the stock just keeps running up. So we can look at levels of 205, 210, 215, 220. And we actually saw that price pretty much came almost all the way up to 220 before reversing back down. But we can use this to set our exits for a trade. So for example, if you played calls or if you went long right here and the stock kept rallying up, well, it's at all-time highs. It's never hit any of these price levels before. So where can you potentially take your profits? You can look for, in this case, you can look for natural support and resistance levels. All right, so let's go ahead and take a look at the chart of AZO or AutoZone. And I'm gonna go through real quick and draw all my lines of support and resistance, then we'll talk about it, okay? So I'm gonna draw my first line right around here and my next line right around here. And the next one, boom, that's a really nice line. Then right here, wow, look at this. Support, 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 support. Look how many times it acts as support right here. And okay, let's draw our next one right here. And this is a beautiful area of resistance, resistance, resistance. Boom, it breaks out to the upside, but it comes right back down. Look, remember that I told you, if it breaks through a line of resistance, it will always come back down and test it as support. So look at this, support, boom, rallies all the way back up here. So let's draw our next line right around here, okay. No, that's not a great area. Let me draw it right around here. Okay, yeah, look at that. Great level of resistance, 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 resistance. Comes over here, acts as support, support, support before rallying back up. All right, and then we can draw our last line right around here. It has about 3 touches, okay? So yeah, so pretty much we see that prices come all the way down here. It doesn't really break below this. It acts as a really, really strong level of support. Every time if you were to buy down here, it would rally back up and you'd be able to get some significant profits. And this looks like a really great next level of resistance. And you could potentially have gone short. You were to liquidate your profits from going long, go short right here, and sell at your next level of support. All right, so we've pretty much transformed a blank chart where you have no idea what you're looking at to now having significant levels here, which gives us a much clearer picture of how the price moves. So how do we use this? We want to look for reversals. So going back to the chart of UPS, we can see that price had a really strong support right here in this area, right here, and it bounced off. So at this time, a lot of buyers were placing their orders to go long, and essentially what this means is that you're buying shares or calls with the expectation that the price will move up. So you want to draw your lines of support and resistance at the most obvious levels. Don't try to draw them at levels with just a few candles. And the point is to have your levels as close to everyone else who is trading the same stock, because other traders will see the same level and will buy accordingly. So you don't want to have your levels where, you know, maybe only a few candles touch it, but you want to have the most touches. So it may not be the prettiest line, as you know, the prettiest line may be right down here where you don't see any price action break below it. But you move your line right up to here, and look, this is where price is reversed a lot of the time. All right, so you can buy at this level, and since price is rejected off of the other level before, you can look to get out of your trade then. Also, if a line acts as a significant level of support or resistance, you can use that for your stop loss strategy. So let's just go back to my favorite line right here, this 156 level. So let's say you were to catch the stock right here when it touched this level right here. Well, the stock market is volatile. It can move either up or down, so you would want to set your stop loss just below it, and this depends on your risk tolerance. So for me, I don't have much of a risk tolerance at all, so I don't want to lose too much. So I usually set my stop losses either $1 or $2 below, and what I can do is just click on this plus sign right here, add alert for UPS. So pretty much what this means is if I was to buy right here and price action decided to break this level, then I would be able to liquidate or set my stop loss for 154, and I could sell all of my shares right there. Alright, so I hope that made sense to you guys. This is one of the most important skills to master when looking to trade the markets, and the more precise you're charting and the more you understand what these levels mean and how to play them, the more money you'll make. In the next video, I'll cover more aspects of support and resistance, including how to play gaps on the charts, as well as moving support and resistance. My goal in each of these videos is to gradually open up the charts for you guys, so that instead of it just being a bunch of candles, you can start to see trends forming and can get a good idea of how to trade these levels. So anyways, let me know down below what you'd like me to cover in future videos, as well as things that you might have questions on, and I'd be happy to answer them. Anyways, thanks so much for watching this, and I can't wait to see you all in the next video. Peace.